So if you want to learn how to trade options, purchase my ebook located at wordly41.gumroad.com. Link will be in the description. And basically, how did I make $136 trading PayPal call options? So basically looking at PayPal, and like I always say, I always look at all of my time or all of my trades on the 30-minute time chart. So 1327. So yeah, let's see. 1327. So basically this candle right here, as soon as I saw that PayPal landed on the 1327. So basically as soon as I saw that PayPal landed on the on the 50-day moving average, I bought a couple of PayPal call options, and when I sold out at 1455. So basically when I sold out the position, I made $136 trading PayPal call options. So basically the game plan is as simple as it can be. It's like I've been telling you guys from the beginning, or sort of, but basically the strategy is basically step one, try to use the moving averages as either entry points, whether you're playing calls or puts. In this case, in this trade, I used the moving average as support and played call options on PayPal once it landed on that moving average. And basically once you find a whatever entry point that whatever you decide is a good entry point using the moving averages, you basically wait for your position to be up 5 or 10%, whatever your risk tolerance level is. For me personally, I try to stick selling out the position once it's up either 5 or 10%. If you want to know where that is, basically pay attention to where it says 6.32%. So once you see that your position is surpassed that 5% target or 10% target, sell out your position, or whatever your risk tolerance level is. So for me, I've always struggled for when to know when to sell out. And I finally figured out, I guess like an easier way to know when to sell out. And basically the easiest way that I can manage my trades to be a little bit more consistent and not guessing if it's going to hit a certain resistance level that same day or same week. I just stick to the percentage target of 5 or 10%. And once it reaches those targets, I move on to the next trade, try to use the moving averages as entry points, whether to either decide to play calls or puts. And then once I see that the percentage is about to approach either 5 or 10%, okay, sell out the position, move on to the next trade, and do the same thing over and over again. Of course, like any other strategy, or I guess like indicator, moving averages aren't always going to be 100% reliable, just as with any other indicator that exists out there. So this strategy isn't 100% foolproof, but for me personally, if for what the strategy is that, let's say the position is down 10%, basically what I'll do is I'll try to basically I'll exit out the position for a small loss of 10%, move on to the next trade, double what I'm supposed to make now. So instead of making a 10% target, I'll try to aim for making a 20% target. But what I'll do now is, instead of buying short-term options, I'll buy little like longer term options. So basically I'll try to play options that expire in a month or 2 months, and basically that way I can have a realistic chance of recouping that previous loss of that 10% loss, and now I can make a 20% profit instead. That way I can recoup that previous 10% loss that I lost in that previous trade. So and yeah, I mean, that's pretty much it to the strategy. It's basically paying attention to the moving averages, and then paying attention to your percentage of your position by how much up it is or by how much down it is, whatever your risk tolerance level is. The reason I try to tend to sell out the position when it's down 10% is because usually if that trade decides to go south, the most money that I would like to lose is by 10%. I don't want to lose a position being down 50%, 100%. I'd rather play it safe, take that 10% loss, move on to the next trade, try to play longer term options now that expire either in a month or two. That way I can now instead aim for a 20% target instead of the 10% target. That way I can recoup the previous loss of that 10% loss of a trade and recoup it in the this upcoming trade that I'm doing. Recouping the trade of 10% loss and the 20% gainer. And so basically that's pretty much it. I mean, try to use the moving averages, have a whatever your risk tolerance level is, by all means go ahead. By me personally, I feel like this is the best strategy for me so far yet. I do use I sometimes trade using the support and resistance levels, but personally I don't do that as often. I only do that when it's when I'm doing leap call options. That's options that expire in 6 months, in a year or 2 years. That's where I find resistance and support levels to be most reliable when it comes to trading options. But using support and resistance when either swing trading or trade like day trading, I kind of feel like it's not very useful for me personally. That's just me. That's a preference thing. I feel like I don't find really much success when I'm using support or resistance levels. Trading, when I'm day trading or swing trading, sort of. But to each and everybody's own strategy and whatnot. But basically, like I said, right. What is it? Let's see how the market's doing. So pretty much the market has switched to a bullish market. It's finally over the 180/200 day moving average. Do I believe SPY could continue this trend towards the upside? As long as it can stay above the 20-day moving average, then yes, I do feel like we could continue this bullish trend of the market. So that's pretty much it. This is not financial advice. As always, take care and bye.